As the Bank of Canada cut its overnight rate, it now sits at 4.5%. So for a look at how this could impact your mortgage, Money Matters, we are joined by Leah Zlatkin, once again, expert at lowestrates.ca and also a licensed mortgage broker. Leah, so great of you to join us to chat about this. So as expected, as forecasters predicted, the central bank did cut its key interest rate by 25 basis points again yesterday. And, you know, a lot of people are saying that, hey, this isn't enough to kind of move the market in terms of getting homeowners or home buyers, I should say, to go back into the market. So what are you seeing on your end? I know it's only been a day, but what are you predicting?
Well, obviously, this means that banks are also going to decrease their rates. So in terms of the overnight rate for the banks, we're seeing it now sitting at 6.7%. Variable rates are about a percentage off of that. So at highest, you're going to get prime minus 1%, which is going to get you somewhere around 5.7. That's still substantially higher than what you're seeing on fixed rate mortgages right now. So a lot of people who aren't super bullish on the market, meaning if you believe rates are going to come down substantially with variables over the next year, some people are jumping into those variable products. For most people, they're still sticking with a 3-year fixed, which means that this isn't changing things a lot for people who wanted to go in with a fixed rate. But if you were looking to go in with a variable rate, you actually do qualify for more home than you used to now that this has dropped.
And Leah, just looking at the housing market right now, if you go on realtor.ca or any of these home or property buying ads, you can see a lot of homes and properties are on the market right now, but there's not much movement. Why do you suggest that, you know, for people who can afford to take out a mortgage or a loan, that they do so now? Because it is kind of a less pressured time to get into the market, correct?
Yeah, that's a great question. So national home sales were up 3.7% month over month in June, but the number of transactions was down 9.4% month over month. So what this means is that houses are not moving as quickly. So if you are a buyer who's looking to get into the market, it certainly is a buyer's market, and there's an opportunity to get a great value on the home that you've been eyeing for a while. So if you are a qualified buyer, right now is an awesome opportunity for you.
And if people do, you know, wait until, how much basis points do you think it needs to drop before we do start seeing that action again in movement of the housing market?
Well, I think that for most people, the bond yields have been coming down as well. So fixed rates have been substantially going down over time. And so for anybody who's looking to qualify, you're absolutely going to qualify for more now than you would have about a year ago. What happens is that with variable rates, most people are waiting until variable rates are closer to fixed rates. So with fixed rates closer to the 5% mark and variable rates still obviously hovering around 5.7%, that's a difference of 0.7%. So most people are going to be waiting until the variable comes down to meet the fixed before they're switching into variable products. What there's forecast of is that variable rates are going to continue going down throughout the year. You know, only the Bank of Canada can really tell us for sure. But there is a lot of presumption that that's going to be happening. And so it is a great time to start moving into the market and considering a variable in the next 6 to 8 months.
Okay, yeah, and we are watching for that next kind of key interest rate decision coming up on September 4th. Leah Zlatkin from lowestrates.ca, really appreciate your time this morning. Take care.